Okay, thanks. It's a pleasure to be here and to talk about crypto market data. So some of you may or may have known that we have partnered with Kaiko, one of the leading crypto market data providers. And maybe to myself, I'm here with Deutsche Börse's Quantitative Analytics team, so part of Stefan's team. And if you're looking for me, then look for the guy without a PhD. So let's go straight into it. So maybe the first question is, how cumbersome is crypto market data collection, right? And so there can only be one answer, and that is yes. So basically, I mean, you can say, well, Roman, come on, crypto market data is free, right? No exchange does any monetization or any sorts of that. But the thing is, you know, there is no standard, right? So you might connect to Binance, you know, then you have like, I don't know, 40% of the market trading volume, but and then you want to onboard the next exchange, right? It's Coinbase or Kraken or Bybit or you name it, and then you look at the different streams, right? And okay, one exchange offers you WebSocket solutions, the other one just offers you a REST API. So when you look at the trades, then you can retrieve those trades through WebSocket or again REST API. But then, if you look closely at the formats of the data that is being presented to you, then one exchange gives you the trade side of the maker, the other exchange gives you the trade side of the taker. Some exchanges don't even publish any real-time order book information, so it's level 2, but some provide you with 100 millisecond sampling data. Others provide it to you with in real time. So there's a huge variety in how this data can be consumed and how it's accessible. So when you look at the main challenge, the main issues or challenges that you are faced with when you're trying to connect to market crypto data or collect it, basically at the center of everything is market fragmentation, right? If you look at the top exchanges or generally at the available list of exchanges, it's huge, right? If you look at the centralized sphere, and I don't want to even get started about the decentralized exchanges. So obviously, market fragmentation leads to, again, lack of standardization. There is just no standard format for crypto market data. You have these high-frequency updates where there's just so much burstiness in the amount of data that you are receiving or that is sent to you that sometimes even the channels are just disconnected. So what do? You have a backup channel. Well, the exchange does not have a backup channel. So if the exchange channel is off, then you are also off. Then it's also, how do you connect to this channel, right? Or do you open multiple channels, or do you try to just consume, for a particular instrument, but then you don't have the history or the depth that you would need for the other instruments, so you don't get this full market view. Obviously, there's also the issue with varying data formats, data inconsistencies. As I pointed out, the diverse access points, and again, the exchange reliability. Some of them offer backup solutions. You can retrieve data through REST APIs, historical data, but that's only on the very same day. Some of them provide you with snapshots within the order book channel. Some of them just don't. They just don't care. So it's really a mess. So what alleviates these pains, basically? This is where data aggregators come into play, right? This is their bread and butter. So their business is to collect the market data, to standardize it in a form, and to make it readily available to you. So in that sense, the data aggregator sits at the center here. In that case, for us, it's Kaiko, right? What they do is basically they build a scalable infrastructure that offers you the potential access point where it doesn't matter how bursty the data is, it doesn't matter how much volume there is, you will always have access to your data. Then they offer you a high market coverage. So today it might be Binance sitting at the top, right, at the crypto world. But tomorrow it might be Coinbase, or tomorrow it might be a contender from outside the top 20. So if you don't collect this data today, you will have no idea of how this data looked in the past. You don't see the microstructure at that exchange. And so you're missing out, basically. This is where the data aggregator sits and has these data pods available for you. Then obviously, what they also do as part of their standardization efforts, they also look at data cleaning and validation. Even if you look at the exchange feed, and you try to reconstruct the order book, at some exchanges you will just have crossed order books. So meaning, where the bid is above the offer or the offer is below the bid. So it's really hard to digest this data and to make, sometimes to get value out of it. One very, very important aspect is also the availability of real-time data and historical data, as I mentioned. So even if you miss out, you can still access the data at a later point. Okay, so this is basically where I want to showcase the value of the data that Kaiko gives you, and the ease at which you can basically use the data to your advantage. I've selected two examples here. So the first one I call this here the overnight cascade. So this was around, I'll go into details soon. This was around August, I think, this year. So this chart here is from Binance, so for the BTC USDT pair. And this was basically in a time where markets were pretty calm, and then suddenly, large sell orders moved the market, and there was a huge discrepancy between the spreads between different exchanges. Then the second one is, more, I guess it's more an interesting example of what the market does, especially in crypto, when it's pretty calm. There is no news, no major news. So sometimes some market players decide to create their own news. And this is where this media report of the SEC approval of the iShares Bitcoin spot ETF came about. Okay, so let's look at the first example here. So at the top here we see the top of book, the mid price on 3 exchanges. In blue we have Binance at the top, and in light blue we have OKX, and in gray this is Coinbase. You also have some triangles. So the blue ones are the buy trades, the red ones are the sell trades, and the size is relative to the size of the trades in general. The graph below shows you basically the spread. So OKX to Binance, OKX to Coinbase, and Coinbase to Binance, also in the corresponding colors. And also one slight remark. So on OKX and Binance, these are the USDT pairs. So the quote asset is the USDT, while on Coinbase it's US dollars. But just for the sake of this example, I just showed them here. The discrepancy is not that much. Okay, in the 3 lower parts, the 3 lower charts here at the bottom, they show you basically the available liquidity around the mid, 5% to the offer and 5% to the bid. So what can we see here? Well, you see that at the top here, so this is where the cascade got rolling. Basically, you see a couple of large trades on Binance, and this led to multiple larger trades relative in size within OKX. And what you see is basically the price diverges, and this is showcased here. So the blue one here on the second panel here, this depicts the spread between OKX and Coinbase, and as well with Binance. So you can see in the peak, it basically reached 4 to 5%. So this is basically a risk-free trade for you if you buy into that market, if spreads normalize, right? So 4%, I mean, I take it. The thing is, how much actual liquidity is available at that point in time, right? And this is what the three bottom panels show you here. And you can see that with the downturn of the market, basically the whole ask side across Binance and Coinbase, it basically went away. So basically, in the beginning, you have 20 million notional available. So before the market drop at Binance, at within 5% range of the mid, while on Coinbase it's 10 million, and then at the bottom and afterwards, it's just it's barely like 2 million or 1 million within 5%. And this is what also an interesting thing is, because someone actually decided to post a trade on Coinbase, and this is the peak here. So they basically traded, I don't know, they moved the market in Coinbase or on Coinbase for like 5% within a single trade. and this is why you can see also the spreads here widening. And on OKX, again, as I said, the specialities with crypto market data. So Binance offers you a quasi real-time order book stream. They delay the data by 100 milliseconds. Coinbase offers you a real-time order book channel, and OKX offers you a 100 millisecond channel, but only for the 400 level, for the 400 levels of the order book. And their order book is pretty thin. That's why you only see this, I would say very, very small amounts of liquidity available at the top, within the 5% range. Okay, so this is this example. This is for Ethereum. For the sake of time, I'll just skip ahead. And this one here is the second example for the Bitcoin spot ETF approval. And there, basically, the story started when Cointelegraph, a very, very very known media venue within the crypto space, suddenly reported that the Bitcoin spot ETF from BlackRock was approved by the SEC. This was basically the sole message on that day, or the only source that messaged this or put out this messaging. However, the market picked this up, and you can see this by some large trades here, right around this announcement, and then you see that that the market movement was pretty significant. So it moved up like 7 to 8%. However, then the market basically realized, well, there is no backup. Even representatives by BlackRock came out to say on Bloomberg, well, we have no idea of who actually approved something, but we don't have any intel on that. And so you can see that also within the exchange on this is OKX and in Coinbase, the cross spread widened pretty significantly, because just the available liquidity at OKX wasn't there to just consume the whole buying pressure. However, when the market just got wind of it, that maybe it's not approved at all, and after half an hour later, Cointelegraph basically changed their messaging to reportedly. This is basically where the damage was already done. Okay. I've got one last example, and this one is basically the same scenario, but now I also wanted to look at the decentralized exchanges. And an interesting insight is, when you want to understand and collect DEX data or decentralized exchange data, on-chain data, that's really not straightforward, because you need to read the block data basically from the blockchain. You need to parse it. You need to be able to identify what is actually designating or what designates Uniswap trade, for instance, and it's really not straightforward. There's a huge burden to actually onboard all of this, all the machinery to be able to do this. And an interesting insight here, so you have as in the previous charts, you have all the trades marked, but the very big ones here, so these, you will probably not see it, but those have a purple frame around them, and these are all Uniswap trades. And you see in comparative in size, they are much bigger. So Uniswap, in that sense, has much less trades in total for any given day, but the trade size is much bigger. So we are talking here, I think that the largest trade within that day or within that period was, I think, 2,000 Ether. And on a CEX or on a centralized exchange, the largest one was around 200. So it's really like 10x. And on that day, I think it was only 6,000 trades for Uniswap. But the volumes are great. I mean, this particular day had, I think, 800 million in volume. So yeah, it's definitely something that you have to account for. And yeah, that's pretty much it.